All right, you got me. It's the cow guy for the Market Day Report here. I've given Marlon the rest of the day off, so we'll see what these prices do while I'm in charge. I've got the controls. Let's take a look at what we've got going on in corn. It looks like it's not going to rain ever again, right? That's what they all want to tell me. 20 cents higher in the front month, July. Let's bring that route right behind my big fat head. 663 and 3/4 is last in the July. Let's go out to the new crop. That's up 24 cents, 621.5, folks. 621.5 for that new crop. About 3 weeks ago, people would have given one of their children away for. So you got to keep in mind what to do when we get up to these levels. We had some decent ranges, 20 cents ish, kabibble. But I want you just to kind of keep reminding yourself that there might be some chances here. Let's take a look at soybeans. They're also obviously higher again today. We had the crop ratings come out yesterday, and I think a lot of folks got surprised. 35 and a quarter cent rally in July. That's up front. 15 and 12.5 is last. And let's go to the NOVE. That's up 25 and 3/4 cents as well, making a move towards that $14 level. 1368.5 is last there as well. So we're still well over the 5-year averages here, folks. I just want to kind of bring, I get out of bed on the side of the producer every single day, right? We have a family farm too. But let's not get out over our skis. I want to keep everybody with a level head here because you can get excited, and I do. Don't get me wrong. I've got an emotion as well, but at the same time, you kind of have to look at these things on paper and go, maybe I should start taking advantage. Who knows? We'll see what the analysts have to say. That's not for me to say. Wheat in Chicago, that's up as well solidly, 32.5 cents in July. That's up front. 728 and a quarter is last. You go out to the D-sets, it got a 32 and 3/4 cent rally as well. 757 is last out there. Hard red wheat in Kansas City, that is also up 33 cents. 33 cents in July has been tacked on that price to 869 even. 33.5 cents higher in the D's to 867 and 3/4. Let's go to Minneapolis. I lived in Minneapolis for 4 years. Twins and a Vikings fan because of that. We didn't have a basketball team back then. That was some prehistoric times. July is up 21 cents in the Minneapolis spring wheat. That's 870 last there. D's is up 21 cents as well to 877. So there you go. That spreads at 7 cents. Cotton, what's happening in the cotton market? Well, let's go right to the D. That's down 51 points to 80.19. All right, let's bring in the venerable Riley Schwieger. He's with CHS up in Inver Grove Heights. Thanks for being on here, Riley. Well, crop conditions, and it's never going to rain again. I guess I just shortened it all for you there.
Well, I'll tell you what's going on the energy side.
Okay.
Obviously, it's been a volatile week, which shouldn't be a surprise to anyone, the way this market's been trading lately. But we saw China cutting interest rates specifically for the first time in 10 months. Usually you'd think that'd be bullish, but it sounds like those rate cuts were a little bit less than expected. And then they also did decrease their demand growth, mostly citing a growing electric vehicle demand. So we saw products crude off sharply yesterday, and we're looking to rebound a little bit on that today. But I think really the overall trend of China is that they're in stimulus mode, and that should provide some tailwind going forward. Small note on the macros. Powell did speak today, did lean a little bit hawkish, suggesting that more interest rates are likely. Looks like those Fed fund futures are pricing in about a 75% chance of a 25 basis point hike at that next meeting. Diesel is really the highlight today. We'll note that there is some backwardation that's growing in the diesel market. It's just telling you, if you're an end user, that there's the product nearby is more expensive, and if you can wait to price that specifically for fall, you're better off taking it that route. I think that market's getting a nice pop today. We did see Russia's offline refining capacity revised up 9% for June, and they're undergoing some unexpected maintenance here for the rest of the month. So that could be providing some support there. But overall, a slow start, but now a green day for the energy complex.
Yeah, I mean, it's going to be interesting. We've got Jay Powell on the Hill today. Obviously, he's going to be talking about interest rates and inflation. But if you take a look at some of these prices, I mean, energy, especially what you've been talking about, look, we could see, we're only, $10 away from having some crude oil prices in the 80s. Yeah, that could hurt the CPI, or at least push it a little bit higher when the Fed's been trying to keep it down. We've got food prices. Look, just got done with a bunch of rallying calls here today when we got corn, beans, and wheat. So we got a lot on our plates here. So it's going to be an interesting, second half of the year, especially with the weather. Let's see what these energy prices do. But I think that's why the Fed's worried about inflation, and they very well should be. But I appreciate you coming on. It's a big part of it, the energy prices. Thank you very much, Riley Schwieger He's with CHS up in Inver Grove Heights. We're going to go away. I'm going to get a glass of water. I've been talking too much. We're going to come right back after this.